Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in Accounting, and our topic today is intangible assets and amortization. So, what is intangible asset? An asset that does not have physical substance is called an intangible asset. Tangible assets are the plant assets, are usual plant assets, such as equipment, properties, vehicles, and so on. Intangible assets, no physical substance. For instance, patents, copyrights, trademarks, or goodwills. And the value of an intangible asset, such as patent, comes from the right it gives to the patent holder, not from the piece of paper that ensures those rights. For instance, a patent for drugs, for vaccines, and so on, and a lot of other patents here. And what is the amortization? Is the spreading of the cost of an intangible asset over its useful life. Amortization is like depreciation, which applies only to physical assets. Some intangible assets have a legal life, such as a patent. However, if they don't have a legal life, or if we are not able to figure the useful life, then we don't amortize them. Okay, so amortization is not for all of the intangible assets. So guys, how do we calculate and record the amortization expense? Original cost, for instance, $45,000. Less estimated salvage value. Usually, intangible assets have no salvage value. When the patent is gone, it's gone. Or any other copyright and so on. So, total amortization expense divided by estimated useful life usually is the legal useful life. For instance, patent, 10 years. So it is $4,500 per year. It is a straight line method. There is no double declining method and so on. So let's go to our Excel file. Remember guys, all our Excel files are free and the link to download it is in our video description. So let's go with that. $45,000. January 2nd, pay the cash for a patent. So patent here. Check $628, debit $45,000, and credit cash $45,000. If it is cash, let's go to the cash payment journal. Date, January 2nd, item, patent, a debit, so check number 628, debit 45,000, and cash credit 45,000. So guys, how much the amortization expense? Useful life 10 years, no salvage value. So let's amortize it. 45,000 divided by 10. So December 31st, amortization expense, debit, $4,500. Pay attention on the credit here. That is the biggest difference between amortization and depreciation. On depreciation, we credit accumulated depreciation. Amortization, we have no accumulated amortization. We credit the asset. So we credit patent $4,500. Okay, so we have no accumulated amortization. Okay, so we credit the intangible assets. Okay, guys, that's it. Questions or comments, leave it here or email me at jscarpin@gmail.com. Thank you so much for watching this video. Have a very nice day and God bless you.